The market is closed, and the last reported closing price for ATAI Life Sciences NV at 10 October 2025 was $6.42 at the 4 p.m. EDT close on the Nasdaq. This figure, resting near the top of its recent trading range, tells the immediate story of a stock that has experienced a massive run-up from its 52-week low near the dollar mark. But the raw price action is only the surface of what's happening here, because the unexpected reality is that this price strength, which seems like pure bullish momentum, has been immediately and significantly diluted by a recent public share offering. The market's expectation after the massive news of an FDA breakthrough therapy designation for their lead program, BPL-003, was simple: parabolic, uninterrupted ascent. The reality is that the company immediately capitalized on this excitement with a public offering, pricing shares at a substantial discount, $5.48 per share, just days after the breakthrough therapy news. This move, while financially prudent for a cash-intensive biotech, created a deep schism between retail investor hope and institutional finance's cold, hard calculus, forcing everyone to recalibrate the immediate future of the stock. The general belief about ATAI, particularly within the community of retail traders active on platforms like Reddit's r/shroomstocks or various biotech X accounts, is that it is the most well-capitalized, diversified play in the psychedelic therapeutic space. This narrative sees the company as the safe bet, backed by a portfolio approach with multiple molecules targeting various mental health conditions, and importantly, with the endorsement of Peter Thiel's capital and connections. The contrarian take, the deeper reality, is that this stock's movement is not driven by revenue, which remains negligible, but by pure binary event risk. The capital raise, while ensuring the company has sufficient runway to fund crucial clinical trials, a necessary evil in pre-revenue biotech, is a sharp reminder that the value is still entirely speculative, resting on molecules that haven't crossed the regulatory finish line. The frustration among retail holders who saw the stock jump to around the $6.75 mark following the BPL-003 designation, only to be hit with an offering priced nearly 20% lower, is palpable. It reinforces the pervasive rigged market sentiment where smart money uses the hype generated by news to secure cheap shares. Yet the data-driven logic says this is simply what clinical-stage biotech must do: sell stock when the valuation is high to fund the lengthy, multi-hundred-million-dollar path to approval. The tension here is between the promise of a mental health treatment breakthrough and the capital structure required to actually deliver it. Recent stock movement has been a chaotic mix of anticipation and aftershock. The FDA breakthrough therapy designation for BPL-003, a mebufetonin benzoate formulation for treatment-resistant depression, or TRD, was, without question, the single most powerful catalyst in the company's history. It immediately sent the stock flying, with massive trading volumes exceeding 10 million shares on the news day, a significant spike from its prior average volume. This represented peak expectation. Then came the announcement of the public offering, which acted as a sharp corrective headwind. The day it priced at $5.48, the stock saw panic selling, effectively resetting the trading base for new institutional entrants and frustrating the short-term retail momentum traders who had bought the news at its high. We saw volumes stay elevated, but the direction flipped from accumulation to distribution as quick flip traders took profits and institutional investors filled their allocation from the offering. The institutional activity here is key. Major hedge funds and specialist biotech funds are now entering or increasing their positions at a favorable price point, a clear signal that they view the BPL-003 breakthrough status as a genuine de-risking event that justifies the dilution. Citadel Advisors, Millennium Management, and other significant institutional names have been active, suggesting a deeper validation of the pipeline than what the fluctuating daily price might imply. The short interest, hovering around 10% of the float as per the latest reports, suggests a significant contingent of bearish bets remain, particularly with the stock having quadrupled in the past year. This short positioning adds fuel to the fire. Any future positive data readouts could trigger a short covering spree, leading to another sharp spike, which is exactly the scenario that keeps the most speculative traders glued to the ticker. ATAI Life Sciences is not a typical pharmaceutical company. It operates more like a decentralized drug development holding company, focusing on transforming the treatment of mental health disorders through a diversified portfolio of treatments, many of which are psychedelic or psychedelic-inspired compounds. Their core business model is to acquire or fund subsidiary companies like 𝐅𝐈𝐍𝐀𝐍𝐂𝐈𝐿 Life Sciences, Perception Neuroscience, etc., that are developing specific drug candidates, providing centralized expertise and capital, and taking on the development and regulatory heavy lifting. The strategy is designed to mitigate the binary risk inherent in single-asset biotech. Beyond BPL-003, their pipeline includes VLS-01, a DMT formulation for TRD in Phase 2, EMP-01, an 𝐅𝐈𝐍𝐀𝐍𝐂𝐈𝐿 formulation for social anxiety disorder, also in Phase 2, and RL-007 for cognitive impairment associated with schizophrenia. The revenue figures reported are minimal, in the mere hundreds of thousands, which is common for a pre-commercial biotech, but their cash position, which was just reinforced by the recent offering, is the only financial metric that truly matters right now. Historical reports show the company consistently beating or just slightly missing analyst estimates for loss per share, which is typical for a company managing its research and development spend. The investment case has never been about quarterly earnings, but about pipeline milestones. Investor sentiment is a turbulent sea right now. On one side, the excitement is legitimate. The FDA breakthrough designation is a massive deal. It means the agency agrees this drug targets a serious condition, and preliminary clinical evidence suggests it may demonstrate substantial improvement over available therapies. The mental health crisis is an undeniable global problem, and the potential of a rapid-acting, durable treatment for TRD is monumental. This is what the bulls on social media, the retail crowd, are excited about, viewing it as a genuine chance to be early on a life-changing medical innovation. They're frustrated by the media's focus on the stock drop following the offering, often seeing it as deliberate manipulation to scare away retail buyers, overlooking the crucial fact that the company secured almost $150 million in gross proceeds. This is the core belief system of the retail collective. Great news should lead to infinite up, and any drop must be the result of a coordinated effort by shorts or institutions. The hope is that the strong analyst consensus, with an average price target around $12.80, will eventually validate their long-term position. The frustration is directed at the structure of the market itself, where dilution is a painful necessity. The near-term focus is squarely on the cash runway and the next clinical data point. The capital secured from the recent offering is intended to fund the continued clinical development of the company's pipeline, most critically the ongoing Phase 2 trials. The market's patience will be tied to the execution of these trials. A positive Phase 2 readout for VLS-01 or the start of a pivotal trial for BPL-003 would be the next major catalysts that could propel the stock back towards its 52-week high and potentially beyond. Conversely, any delay in the timelines, or worse, mixed or negative data from any of their key programs would cause a swift and brutal repricing given the volatile nature of the stock. Investors are looking for any sign of partnership or licensing agreements which would provide non-dilutive capital and third-party validation. From a technical trading standpoint, the $5.48 offering price has now established a critical psychological support level. As long as the stock holds above that level, the market seems to be signaling that the breakthrough designation's value outweighs the immediate pain of dilution. A breach of that support, however, would signal a loss of confidence in the short term, pushing the price back towards the lower $4 to $5 range where consolidation occurred months ago. For the retail investor community, the narrative of a short squeeze potential remains strong due to the 10% short interest, making any significant positive momentum a magnet for rapid speculative buying. The future outlook for ATAI Life Sciences is a direct equation of execution plus regulation. The expectation is that the breakthrough designation will accelerate the clinical path for BPL-003, making it the fastest route to potential commercialization, which could fundamentally change the company's valuation, from a speculative play to a near commercial one. The reality, however, is that this is still a clinical stage drug, and the FDA's designation doesn't guarantee approval. The company still needs to successfully complete Phase 3 trials, which are expensive, time-consuming, and prone to failure. The opportunity here is the potential to be a market leader in a mental health treatment paradigm that is only just beginning to gain widespread acceptance. The risk is the biotech fail rate, combined with the regulatory and societal hurdles still surrounding psychedelic-assisted therapies. The retail sentiment will continue to swing wildly based on headline news, driven by hopes of a life-changing drug and frustration over perceived corporate actions that benefit institutions over individual investors. The smart investors are watching for the Phase 2 data from VLS-01 and, most importantly, any updates on the design and initiation of the BPL-003 Phase 3 trial. The next 6 months will be about clinical execution. Comment below with your thoughts. Do you think the immediate stock dilution after the breakthrough therapy designation was a savvy financial move or a slap in the face to long-term shareholders? This will keep the dialogue focused on the core tension between expectation and reality. In the end, the central insight is this. The market's initial expectation of a simple, clean, upward trajectory after a major regulatory win was instantly contrasted by the cold, hard reality of biotech financing. A profitable stock price exists, for now, to raise capital for the R&D that justifies that price in the first place. The stock's performance from here won't be about the $6.42 close. It will be about how efficiently the company uses the capital secured at $5.48 to advance their critical pipeline assets. This is the difference between a high-risk gamble and a calculated scientific investment.